Good morning, guys. Welcome to this Friday, April 11th. And overnight, back and forth, volatile, but not absolutely directional. We got some bank earnings this morning. I guess it was good numbers from JP Morgan. No, Chase. I saw it was Chase. Was it JP Morgan? It was both of them, maybe. So we got they were across the board good numbers from what I understood. So uh, bank earnings kicking off earnings season. The overnight, fairly calm. It hasn't been absolutely crazy in terms of moving around. But you can see here on the F2, we have range to work with. We have tons of range. And it's starting to get to start aggregating this even further to be even to get a picture of it. But at this point, I'm just going to leave it as it is, and hoping that maybe the volatility calms down here a little bit. So a reasonably calm overnight. It started off a little bit to the downside. They ran it all the way down here to the 5200s. Now they've been all the way up to the 5370s. So 170 point range in the overnight is what we got to work with. And if the bank earnings is going to be positive, I think it's at least starts off the day with a decent way. Now, in overnight, the Chinese also retaliated again on the tariff, so that's still going on. And as long as these things are happening, I think we are still going to see a certain amount of volatility going on. News-wise, we also have PPI coming out this morning at 8:30, and then we get consumer sentiment at 10. So PPI 8:30, consumer sentiment at 10. And there could be a small reaction, as you saw in the CPI, and the reactions are not by any means uh, as big as the impacts of various tariff headlines as they come out. But definitely worth paying attention to. So at 8:30 in a few minutes, we get the PPI number and consumer sentiment at 10. We also have a few speakers coming out throughout that time as well. So I will start off range bound at this point. I think the market is definitely finding a resistance area here at 5500s. We have one clear area at 5300s. We have another area down here at the where is that? At 50. We have 5200 for that volume edge. Worth paying attention to 5160s, a little attractor at the 5100. As we start getting lower here, it's getting a little bit less obvious, but the 5200 volume edge definitely something to pay attention to as well. So as long as they hold above that, I'm going to start off range bound and see and just trade the range. Assuming that we're going to get that anything can happen in terms of directional moves, and we may see definitely retest of the highs or potentially flat out sell-offs right back to the lows again. But I think given this massive volatility we've been seeing, so if I go down here, I think we have at least a floor here between the 4850 and the 5000. The pro down here in the 4800 a few times. And if they start making some of these trade deals now in this 90-day window, I think they're going to be in good shape to hold the market together. If that doesn't happen, something that comes back up again, tariffs starts coming back on again, yeah, that's probably going to be down in the 4800 or in the 4000s again. And again, nothing we need to worry about at this point. At least I think we have that 90-day pause to work out trade deals. I don't think they're going to put on any more tariffs. The only thing which is going to be left over to worry about is the back and forth between China. So some people are going to get caught in that, obviously. As resellers from China, people relying on various Chinese goods are going to be obviously getting a pretty good wake-up call when they try to buy any of that stuff again. So that obviously going to be an impact. We'll see how this whole thing plays out. I'm not even going to try to forecast it. I'm thinking that it's going to be probably less impactful than people think. Because a lot of the goods are stuff that you probably don't have to have, but want to have, If it comes to goods which you have to have, rare earths and stuff like that, pharmaceuticals, that would be a different story. But It's on now. There's no going back. So it's at right now, this whole thing is going on, and just have to kind of see how things shake out and just keep an eye on it. But for the rest of the country and the rest of the tariff barriers, the 90-day pause is probably going to be very helpful holding this market together. So I'm going to start off range bound. I'm going to look to sell up to this 53.70, look to buy down to that 5200, the overnight range. And I'm going to watch very carefully if they start taking out this area, the 53.60s and the 80s and start extending past that. At that point, I would be on the long side looking for a potential move up to the 5500s. And if they for some reason take out that 5200, yeah, then I'm going to start thinking about maybe they're going to run down here and test the 5000s down here to these volume edges. So that volume edge comes out. There's spots on the way down, but nothing is really strong here. I mean, you can see how they blow through things back and forth. And when the selling starts, this is not any good ledge to really lean against. So, but I think the 5000 area, you have a 5100. You have the 5170 are all worth looking at when you get there. But initially, I'm going to start off range bound, assuming that we're going to get more of a range bound, kind of a trading day, given this volatility, given that the good bank earnings, the 90-day pause is in place. PPI, I hope is going to come out on the weak side too, helping us out as well. So looking to sell strength at this point, 53.30s. I would prefer the 53.50s, 60s, and the 80s here for rotations back down. It could be an edge right there as well. Hard to say. I didn't want to make this too cluttered, but it could be one right there, that little edge right there. But I'm going to leave that off for now. So looking at, so basically from the 53.50s, I'm going to be looking for short opportunities up to that 53.80s. And the obvious edges is that 5-letter edge at 47.50, the edge here at the 60s, the edge here at the 77 to 80s. So these are the three levels I'm going to look for short setups against. It could be something here, but it's kind of right in the middle of it. The reason is that have a mode there, so running it up to this attractor mode. Short term could be a potential quick short there. And on the way down, I'm going to look for buying opportunities against let me go down like that. Buying opportunities against 5300s, 5280s, 5270s, 5250s for rotations back up. And if they keep going below that, that would be if they take out that London low. We have a couple of more levels here down at the 5230 and the 5200. 52, this is kind of 10, 5205. So these areas of support are going to be a little bit less aggressive, but definitely look for buying opportunities against them if we get that far. I think it's if we start taking out that London low at 52.50, chances are we're going to be retesting these lows. I would probably be staying on the short side at that point, still looking for buying opportunities at the 52.30s and the 52.05s, rotations back up. But below 5200s, better off just stay on the short side at that point. Probably the volatility is way up at that point. Overnight looked actually kind of tradable. So I mean, it's the bars are still big, but it looks like it's coming down a bit. So we'll see if the volatility is going to create some trading opportunities today. So initially looking for buying opportunities against the 5315s, 5300s, 5280, 85, 5270, 75. 5250s for rotations back up. And then you had those 5230s and 5205s below that if they keep going lower. But they start taking out the London low, I would be probably trading it from the short side at that point, still looking for those buying opportunities towards the lows. All right, so that's the ES. Let's see what kind of crazy day we get. And of course, as I said, getting short and looking for short opportunities all the way up to that 53 is 75 to 80s. And you can see the reason it's snapping back and forth because when I scroll the chart, it gets too far away. So the auto centering snaps back. Now, if you're messing around with your F2 chart, if you right click on it, you go to profile, you can turn off that disable centering. And that's going to keep the chart from snapping back and forth when you're trying to draw ranges and stuff like that. and then you just turn it back on again, so you don't have to try to find the market again if the market moves outside your range. Anyway, so there you have it. Overnight, 590,000. So it definitely came down. We were trading around 1 million going into the last overnights. We had like into the 800,000 into about the 800,000 going into yesterday. So coming down a little bit, that's a good sign. It usually should be around 100,000 or so. It's the normal volatility. So if it starts coming down a little bit, maybe we can get some trades on here. I've been very cautious on my trading. A couple of test trades on my little bit more aggressive account, but it's yeah, you're basically in and out, and it just knock you out right away. You get lucky, you get in on a move, and it actually moves away from your entry point a little bit harder. That's when you have an opportunity to stick with it. Otherwise, if they just go in and you see the normal rotations, the volatility just flat out knocks you out. So bonds, kind of weak. So bond market heading back down again. They're down here against these lower edges, the 112s. And I would say the 112, 113s, they were down here probing it. They were down at the 112.22, and if they stay below the 112, I'm going to be really concerned at that. Then they can run it quite a bit lower. The last edge to test is going to be down here at the 110, 110.20. But that means that the yields come up a bit again. Higher yields are going to be bad news. High yields are going to cause a lot of heartburn because if you didn't know, they have about $1 trillion of debt they need to refinance this year, and they refinance it at the 10-year rate. So, if that rate is high, guess what? Your interest payment is going to be crazy. So they're trying to keep those rates low so they can refinance that debt at lower rates. That's going to be a key thing. This is something people don't talk about too much. They mention it now and then on the news, but it's a massive thing. So if you think about the amount of debt, the interest on the debt, on $34 trillion in debt, and what a percentage point does on that, or half a percentage point does, it's a lot. Now they don't refinance that whole amount, but they're refinancing, I think, about $1 trillion this year. So that's where we are on the bonds. So bond market, I would trade it from the short side still, watching that 114 level, looking for short setups against the 113, 16 to 18, 24s up to the 114 and 114.04s for rotations back down. If they trade up above that 114.04s, I'm thinking we are running back up to this attractor at 114, 15, 16 and probably staying there. But then at this point, I would start from the short side and see if I can take it. And not going to be super aggressive in buying this. But there is buying opportunities against the 1309s, 113s, 1228s, and down to that 1220 to 22s. So buying opportunities there. Now, the bond market, the bond 30 year is moving. So there is some money to be made on the 30 year. It's fairly well behaved if you can handle it. Volatility, the margin trading, it is not that crazy, and it's a good contract to trade. It's well behaved at the edges. It's just that it's so slow. You had to freaking sit there in a trade right from the get-go and really let that go, and really be prepared to sit through it, But anyway, so trade the bonds on the short side to get started. Watch that upper edge at the 114s. If that comes out, then we're taking off the short bias, going back range bound. On the NASDAQ, I'm going to start off the same way on the NASDAQ as on the ES, range bound. Looking to sell strength up to that 780 to 800s. Buy weakness down to that 18,000s. That's the overnight range. You see the edges up here. We have a pretty good 5-level edge here at the 350s. All right, that's to the lower end of the London session. So that's one key area to pay attention to, that 350 level. Very clear on that capital flow chart. On the F2, it's freaking impossible to see. So, but on the 18350 key area to pay attention to. But early on, looking to sell strength against this at this point against the 6. We're trading down at this 560, so it would be at the. Not going to pay attention too much to this edge. I'm actually going to take this out. I don't think I don't particularly care for this guy. It's not a good edge right there, that one. So I'm going to go in and do this and looking for short setups against the 650s 700s, 750s up to the 800s. So 650s, 700s, 750s, and the 800s. Looking for short opportunities against these upper areas for rotations back down. And on the way down, if they head lower, looking for buying opportunities against the 515s, 430s, 350s, and the 300s for rotations back up. So here you have that 300 to 350 edge. If that comes out, I would lean in on the short side on the NASDAQ. At that point, I think they're heading lower. They still have an overnight, which traded a lot lower than that. And they may be still buying opportunities, but if they take out that big 350 edge on the downside, I think they're going to be heading lower. I may still be looking for buying opportunities against these lower areas at the 250 and lower, but they're not very aggressive at all. So if they start selling off, they take out these two areas, the 350 and the 300s, I would stay on the short side of the market. So that's the NASDAQ for you. Looking at oil and gold, and look at gold. Wow. Look at that freaking thing. I mean, that is something, isn't it? So gold. Here's gold for you. They just made a new. The movie started here, the back down here from the 3080s. They start taking out this area. Big move to the upside. It's really a start of a move out of the middle to the upside. So they are right here up to the 3250s. Massive move in the overnight to the upside. So they blew through all the resistance. Stay on the long side. The only caveat on this, as I usually say, when gold extends like this in the overnight, you usually have a pretty good retracement happening in the day session. So I would be looking for that. And if they start taking out this area, I would say these two support areas, the 3220s and the 3228s and the 3220s, these two support areas. If both of them comes out, I would look for a retracement trade all the way down here to 3210, maybe even the 3200s. So that could be a pretty good short setup there. If they start taking out this area 3228s, that's going to start. I would look for confirmation of the 20s before I really start leaning in on that. But that short trade could certainly run it all the way down there. That usually happens. It's pretty high probability when you have a big move like this in the overnight. But if it doesn't, I would just stay on the long side. You'll see it happening fairly quick, I think, if it's going to happen. And if not, probably just stay on the long side, look to buy against these. Because these are still buying opportunities against the 28s and the 2022s. Looking for buying opportunities, look for buying opportunities against 3210 and 3200s. But these two here, they hold. We are still staying on the long side and looking for moves to the upside. And on the short side, no reason to be very aggressive at this point. 3240s, 3250s, a potential short setup, but I would not be super aggressive against them. So gold, big move to the upside. I think someone is buying gold. Could it be the Chinese preparing for a long knockdown drag out? Maybe. We'll see. And finally, oil. Oil. Not moving a whole lot. Let me see. That's my oil. That's my bonds. This one. Here's our oil. So we are pretty much holding in a move to the downside, building value around 60, 61. So this is where it starts. So we talked about this before. A little pop to the upside, but a good move to the downside. First move out of the middle to the downside and all. They've been trending down slowly. Then we had a little pop here based on tariffs, threats, and so on and so forth as they put that on there. That's what that pop was all about. Now, big move to the downside on oil. First big leg down. And this is going to keep going. I believe, I think they talked about the target in between the 40 and the 50 area. So when you get down below 50, I would be maybe looking at a little bit less aggressively selling oil, but I would prefer the short side on oil. I just have to be mindful that the tariff headline comes out and things spike. You can see how big things spiked over here a few days ago when some news came out. Some news came out about the tariffs. So I would still trade it from the short side, looking to sell strength against the 60-50s, 61s up to the 6150s. And let me see here, 62, 63. So 6150 up to that 6170. So that's the above that one. I would actually start on the long side and see if they can retrace this further. So initially looking for shorts against that 6050, 61s, 6150 up to the 6170s for rotations back down again. And if they can't take, if they one of them holds, we are back down. If not, they take out these upper areas. I would start leaning in on the long side and see if they can start retracing this, testing these upper areas at the 63s and 64s. We'll see. And on the way down, looking to buy against the 5970s, 5950s, 5920s, and 5880s, all with a bit of caution since we are leaning towards the short side. But we are pretty range bound right now. You can see starting to build value here. So I would not be too shy about buying against these. I would just wait for a good opportunity. So looking for a good retest failure kind of opportunity, forget to get long. Below the 5880s, just stay on the short side. So below 59, definitely take off the any buying interest and go back and stay on the short side, and you get confirmation below that 5880. So these two support areas are key. If they come out, just stay on the short side at that point. All right, so that's oil to get started. So range bound oil biases to the downside to get started. Gold, we're starting with the bias to the upside and watching for that potential retracement trade based on the overnight run up. And we'll see if that materializes or not. And then back to the ES. Looking at ES, we are pretty much holding where we left it. So that's pretty much where we are. Alrighty, guys. We'll wrap it there for this Friday. Remember, it's Friday. Thank God it's Friday. Need a weekend. This crazy volatility is just really making things difficult to trade, stressing all systems, including our minds. So good trading, guys. And I'll see you back at 11:30 for the next update later.